Good afternoon, delegates. One minute. Good afternoon, delegates. Welcome back to Huddle 2021. Today's Trialogue session will be discussing running digital asset enterprises in emerging economies. The moderator for the session is Sidhartha Shukla, Senior Staff Writer, ET Prime. The speakers for the session are V.Gowribalan, Chief Executive Officer, GRIP, and Sandeep Goenka, CEO, Yapstones Technology. I'd like to hand it over to Sidharth to take forward the discussion and start off the topic in relation on running digital asset enterprises in emerging economies. Over to you, Sidharth.
Sure. Thanks for the introduction, Soham. And I'm really excited about today's topic, running digital asset enterprises in emerging economies. Now, there couldn't be a more opportune time to talk about digital assets and emerging economies than today. Like yesterday, El Salvador became the first country in the world to adopt Bitcoin as a legal tender. And a recent report by blockchain analysis firm Chain Analysis showed that India ranked second in the global cryptocurrency adoption index. And as per the same report, 9 of the 10 countries for crypto adoption were developing nations. The only exception was the US, which was ranked 8th. So, with no further delay, I'll quickly start the discussion. And hello, Gauri, Sandeep. I'm glad to moderate this panel with you guys. So let's start with the biggest event of the week. Bitcoin has become a legal tender in El Salvador. What are your thoughts on this development, and how can an emerging economy like El Salvador benefit from this move? Sandeep, would you like to go first?
Yeah, sure. I think it's an absolute historic moment in Bitcoin's kind of history, and it's a very big milestone. We always, Bitcoiners like me, always expected this to happen, but I think even I'm surprised at the how early this has happened. I think we've been expecting, in terms of adoption, we've been expecting first, retail investors and institutional investors, and then maybe sovereign funds and central banks and countries to adopt this technology over a period of time. So I wouldn't say that we are surprised. I think I'm just surprised at the speed at which Bitcoin is catching up. It could be due to the unforeseen macroeconomic situation which has developed since last year because of COVID-19. I believe countries who are at the forefront of adopting Bitcoin are going to tremendously benefit. And I think El Salvador is going to lead the path in that. And I'm really happy for the country and for the citizens of that country.
Sure. All right. And Gauri, what are your thoughts on this? Do you think that this is the start of a trend and we'll see more such countries adopt Bitcoin or some other cryptocurrency as a legal tender?
I'm not sure. I'm not too sure. I wouldn't jump into that bandwagon simply because when a country adopts, in El Salvador's case, they didn't necessarily have a national currency. It was a dollarized economy in more ways than one, where the legal tender was the US dollar, and I think they had two legal tenders prior to this. But when a country says a particular medium of exchange is a legal tender, which means as a vendor, if I were to sell a service and if the client chooses to pay with BTC in this case, I'm forced to accept it. I may or may not want to do that simply because there's associated volatility. The RAMs are weak. The rails put in place may not be adequate to preserve my risk or preserve my margins on that transaction I did. Secondly, a country like El Salvador's internet connections and things like that, internet ecosystem and infrastructure, I don't know how developed it is to handle it at en masse scale. Thirdly, if a country adopts it as a legal tender, see, regulation works as same risk should have same regulations. Okay, so if I were to execute a transaction within a local currency's legal tender, or hard currency, which is acceptable universally or globally, now if I'm subjected to the same thing, that those kind of parameters do not exist within this ecosystem. It's not easy to implement it. So from that point of view, I'm not sure many other countries would be able to jump as fast as they can. And I'm not sure of their intentions either in doing this, given that they come from a region which has lax AML rules and regulations. So I think it's a good basket case. It's a good thing that somebody else is doing, and you can learn and see what happens from all the mistakes they make. But I'm not sure if every country would be as daring to go ahead with something like that. And that's just my personal view.
Sure. Shunu, you made some interesting points, Gauri. There are obviously still concerns around volatility and scalability of Bitcoin as far as it goes. Sandeep, what's your thought? Do you agree with Gauri on certain points that he made?
The points are all true, but I think they take away the kind of focus from a long-term perspective. This is, I think, though all these are operational issues, and they are like talking about the problems with the internet in its early days. That the access is poor, it's extremely slow, and Bitcoiners have heard all of these. Arguments against Bitcoin. The amazing thing is that within 12 years of its invention, a country has actually adopted it as a legal currency. And if you compare the two currencies that they have, so it's a dollarized economy. Okay, so you compare the US dollar with Bitcoin and you compare both of these, the amount of US dollar that was printed in the last year was 30% of all the US dollar that ever existed. So all these fiat currencies are actually being inflated out of its existence, and this is not this monetary system is an far more dangerous experiment. So you can say that Bitcoin has a lot of problems, but then what about the problems of currencies like dollar, like fiat currencies in every country, which central banks are inflating out? And really, the population that suffers is the middle and the lower class at the expense of the upper class, because assets gets inflated out, and it has a massive impact on savings. So there are. I think this needs to be viewed at a far higher macroeconomic level, and then it needs to be decided whether this is a good or a bad thing to do. I think Bitcoin's fundamentals as a currency, as a store of value, remain intact, and I think countries which adopt it earlier rather than later, which will benefit just exactly like individuals or retail investors who have adopted it earlier rather than later are benefiting today, just like institutions who are adopting it earlier rather than later are going to benefit. I think it's going to be same for countries. Yes, there are operational challenges. They will be resolved over a period of time.
Sure. Interesting points by both Gauri and Sandeep. While the debate around fiat versus cryptocurrencies can go on for long, I would like to focus a little bit more on what this experiment means and what we can expect from a country giving such a safe haven surety to a cryptocurrency, right? So, Sandeep, Bitcoin is not a physical commodity in itself. It's a network technology. You can build many things on top of that. There are businesses that can be built on top of that. Your first venture in India was built on top of that, right? So, what do you see like now in El Salvador, where you have the backing of the government, right? How that can change the landscape over there? What kind of possibilities lie ahead for entrepreneurs over there? Yeah.
I think the possibilities are absolutely endless. I think there are things which we cannot even imagine today, just like we could not imagine using the internet like the way we do today. We could not imagine e-commerce. We cannot imagine ordering cabs on our phone. We cannot imagine artificial intelligence and the access to AI using our phones, all because of the internet. Similarly, I think there are just in the very short term, I think there are two massive possibilities. One is the fact that El Salvador, because of this absolute clarity in regulation and access to Bitcoin by the citizens and by the government, El Salvador will increase its access, its stake in the amount of Bitcoin that they own as a government, as a country, as citizens, and it's an asset which has been the best performing asset of the last 10 years, and it more and more traditional institutional investors are saying that it's going to be one of the best performing assets over the next 10 years. So just using Bitcoin as a possible store of value, and in India, we are used to it, right? We traditionally use gold as a store of value. I think that's going to be one of the biggest benefits to the country. The second, which normally, according to me, is far kind of lower in its importance. Of course, it's important. It's its mode of exchange. People kind of place it higher than store of value function. That's going to happen over a period of time as well. Right now, when you have two currencies in El Salvador, one Bitcoin, which is appreciating 120% every year, and $1, which is depreciating in its purchasing power every year, I would think that more and more citizens would use it as a store of value and would continue to use dollar, as a mode of exchange. Bitcoin provides some use cases which cannot be thought of with fiat currencies, and you'll kind of see those use cases emerging out of El Salvador as well.
Sure. Gauri, what are your thoughts? What are the opportunities that lie ahead in a country like El Salvador, where the government is supporting this entire crypto economy, while Bitcoin is a money product? It seems that the government in El Salvador is quite accommodative with crypto tokens in general. So, do you think that we are going to see a lot like that country is going to become like a hotbed for a lot of innovation in the years to come?
I guess there is a theoretical potential which underpins that argument, but in reality, for me, I struggle to. I have nothing against the technology or the asset itself. I think it's great. It's been a wonderfully performing asset, and it's been lucrative. But it also, there is an underlying fact that if an asset is going to be a store of value, then if I'm going to use a store of value as a medium of exchange, I've got to manage volatility on two ends of
Yeah.
the spectrum, on two sides of the thing. That is not the purpose of a currency, because a currency should be a unit of measure. And so, from that point of view, I struggle to see it as a currency. Instead, I see it more absolutely right in terms of store of value, yes, and it's not backed by real world assets, so there is that aspect of it to worry about as well. But for me, the most important thing about currencies or fiat currencies is the fact that there is a centralized regulation. I really appreciate the fact, because if that was not there, agnostic to what has been told about the amount of dollars in circulation, or the euros, or the central banks having a loose monetary policy, one couldn't have saved certain economies and financial institutions in those times of crisis if you hadn't had that centralized power. And you need that, because if you don't have that, you will not be able to manage certain these booms and busts which happens in economy, and that is part and parcel of life. It has happened previously, it will continue to happen. So decentralized currency as a concept is great, but then it needs to have a unit of measure. And I find most of the proponents of digital currencies are the early adapters. I mean, it's like what we see in the stock market. You buy into a stock early, you keep promoting it because you have a benefit out of it when it goes up in value. Whereas, why do I need to buy something at price X when I'm buying it off someone, when if I just want to buy a cup of coffee with it, I need it to be the same thing. I don't want somebody else benefiting of that, because that was not my goal in the whole point.
Sure.
So I think those are certain fundamental things that have an issue. If someone wants to adapt it as a store of value, yes, it's got its merit, it does serve its purpose. But as a unit of measure or a medium of exchange, in my view, I'm still not convinced. I would
Interesting
trade any day,
point,
but
Gauri. I mean, glad to
yeah.
have like Sandeep, who is sort of a Bitcoin evangelist, and I could see him shaking his head. I'm pretty sure you have many disagreements with Gauri's points right now, but legit concerns, and there are arguments against those concerns as well. But let's diverge a little bit more on crypto because that this debate will go on, right? Whether a decentralized money product like Bitcoin is necessary or not. But over the years, we have seen that Unlike Bitcoin or Litecoin, tokens which are meant to be a new decentralized money product, this entire new asset class has evolved, and we have many use cases and solutions which are built on top of that as well. Like we are seeing the rise of NFTs right now. There's decentralized finance, digital securities offerings that are happening as well, and we are seeing emerging economies really catch up to that trend much faster than their developed counterparts, right? Like I mentioned in the list by chain analysis, right? The top countries are like India, Vietnam, Pakistan, Kenya, Nigeria. Nigeria is a different use case altogether. But with regards to these use cases and this entire new asset class, why do you feel like that the emerging economies are proving to be like a fertile ground for the development for these solutions? Sandeep, why don't you go ahead with this one first? Yeah.
Yeah, just as a context, I want to differentiate Bitcoin from the entire asset class because
Sure.
you mentioned that these cryptocurrencies are decentralized. I strongly believe that honestly, really on the spectrum of decentralization because it's a spectrum, it's not black or white.
Yeah, got that.
Bitcoin is really the truly only decentralized cryptocurrency out there, and so I kind of compare Bitcoin with the internet, and everything else is highly centralized, including the next biggest altcoin out there. So I just want to say that I'm talking about Bitcoin and nothing else for the
Okay.
audience. Um, I, so I kind of feel like these technologies are emerging or are extremely popular in emerging countries like Nigeria, like Africa, like India, for a couple of reasons. I think it's the advanced economies have a pretty developed financial system. More people are banked than people in emerging economies. So there is a kind of a natural. This becomes a kind of you can leapfrog the existing financial infrastructure of credit cards and bank accounts and stuff into Bitcoin and cryptocurrencies into the store of value function. So I think for India, for example, we already have an intuitive belief in gold to store value because we maybe don't trust our currency because it depreciates about 5% on an average every year. So we kind of feel like we can do that with gold, and I think that kind of same DNA follows on to cryptocurrency. So I think the lack of banking infrastructure, of advanced financial infrastructure, the store of value proposition, the lack of access to kind of international credit cards, and all of these reasons, the fact that we are a extremely high remittance country, all of those reasons make it very, very natural for emerging economies to adopt these cryptocurrencies. Latin American countries have suffered from inflation far more than developed economies. So we intuitively understand the problems with inflation, which Bitcoin solves.
Sure, sure. Really interesting point mentioned you about hyperinflation as well. From my reporting, I'll just quickly give an example of what's happening in Nigeria. While Gauri is right that Bitcoin continues to be volatile, but it's very interesting how it has evolved into a store of value as well as a money product in Nigeria, where the national currency has lost its value by nearly around 30% in the last 1 year. So people use part of it to trade and make some money out of it as well. And what people are doing, it's very interesting that they are using Bitcoin to translate that into USDT, the stable coins, which are dollar backed as well. So Bitcoin is acting as a safe store of value over there. It's also acting as a translator of money from one form to another. So that's a very interesting use case that I know I've seen come up very organically in Nigeria. Gauri, let's come back to the question I had asked. What do you think are the catalysts why these emerging economies are adopting these technologies so fast? And I had mentioned other use cases as well, like security token offerings. You yourself had conducted a successful digital securities offering last year worth $10 million, correct? So, what's your take on this? Why are these economies are a catalyst for this technology? And what are your takeaways from the digital securities offerings you had conducted last year?
Yeah, I think to answer the first part of your question, when you consider an emerging country or an emerging economy, a key facet that underpins all of these countries or regions are that the rule of law, regulatory infrastructure or systemic infrastructure, be it in terms of anything and everything, is emerging. So it's not
Yeah.
there where it should be. In systems like that, or in within ecosystems like that, a technology like blockchain or the digital ledger, DLT, the primary function of that, it disintermediates trust. So if I cannot rely on the systems instituted by the rule maker, the policy makers, or what is there in the country, if technology can come to disintermediate that process and give me confidence, the 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 chance of that technology to be adopted en masse to solve day-to-day issues is far higher. The potential is higher. I believe that is one key aspect that enables this technology to be adopted primarily in these countries immediately. And then going back to Sandeep's thing about probably within a developed market, the need for that is much less relative to an emerging economy. So I think that's one reason why adoption rates would be higher. Second is that uh, when the internet growth happened, it was concentrated within pockets of certain parts of the world, and then it emerged. Whereas here, because of internet, there was a lot of people from different parts of the world who were able to get into building on the uh, building into the ecosystem, starting with the video games or video game communities who were one of the early adapters of, and they were very
Yeah.
familiar with using tokens as medium. Uh, so I think that also the fact that a lot of people were able to come through, it meant that once a new industry has emerged and that you can contribute, you can build, the ones who are going to jump, like there was no there were less barriers to entry. So given the most of the significant majority of populations live in emerging economies or frontier economies, the probabilities are stacked that it will come from there as well. So I think given both of these, it's only natural that we expect a lot of adoption from these regions.
Sure. So the inherent need for financial inclusion in all these jurisdictions is sort of like a primary catalyst for, would you say that?
I think financial inclusion. Sorry, Sandeep, you wanted to say something.
No,
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 go
I was just
Okay,
going.
yeah,
okay. So
yeah,
I think financial inclusion and bringing financial inclusion to use it as a basis, as a key merit in pushing cryptocurrencies towards mass adoption, I think is a bit overplayed, because financial inclusion, uh, it's like. I think that's it's a say it's one of those wolf in a sheep's clothing that is used by bad actors to actually push things through. That shouldn't be the case, because if it's financial inclusion, what needs to be there is certain regulatory provisions, and the policymakers should enable infrastructure to facilitate different people to participate. You can start with mobile money. You can start with enabling people to be able to transact at a lower cost. If remittance players are charging you 10% and 5%, and if digital currency is an alternative to that, the problem there was the fact that there were so many intermediaries eating off your thing. And using digital currency now to do remittance doesn't necessarily solve the problem. It just makes it easier because you have less documents to show to prove your worth, and again attracts all the bad actors. So I think financial inclusion is a definite need. It's something that people need, policy making needs to be directed towards. But it is the underlying technology, that is DLT, that can facilitate financial inclusion, and not necessarily a cryptocurrency or anything like that.
yeah. So Sandeep, you're nodding your head, and we've heard this argument time and again around that. The underlying technology, DLT, the blockchain, that has a lot of potential, whereas tokens aren't really necessary. While from my experience in reporting and talking to many people and seeing many use cases, I don't believe there's an absolute in either parts of that argument. But like, can you help us understand, like, what are some of the use cases in which you would say that yes, a token is required, right? DLT is not necessarily the best solution in that case. We can have centralized databases as well, which can do the same work more efficiently. Correct. So instead of going whether one is good or one is bad, in what cases do you need like a token? Yeah,
Yeah, yeah. There is there is just so many fundamental issues I have with this conversation, but it's interesting. The only point that I agree with Gauri on is that yes, because of the access to internet, the barriers to kind of access cryptocurrencies is low. That's the only point I agree with. Everything else, I have a fundamental disagreement with, but which is very common. I think it's a misnomer to kind of say that Bitcoin is an application on top of blockchain. I think it's actually the other way around. It's actually Bitcoin powers a blockchain. If you understand how a decentralized database works, it actually works because there are incentives for people to maintain a decentralized database, and that incentive specifically becomes a token. In Bitcoin's case, it's Bitcoin. In the case of other cryptocurrencies, that entire process is a lot more centralized. So I have fundamental issues with that, but it's a much longer conversation. So according to me, blockchain or DLT, as Gauri is saying, is the bottleneck. It's the trade-off. It's the worst part of the moving parts in the technology. It has the lowest transaction output. It's extremely slow. It's the trade-off that we make to achieve decentralization. An analogy would be that the LAN network in our residences and offices is it's much faster than the internet. We use the internet at a much slower speed compared to our internal networks, just because the internet is decentralized. So that's the trade-off. Similarly, the trade-off for decentralization is the lack of performance in the case of the Bitcoin blockchain. And I think it's once when you kind of understand that, you'll realize that money, in fact, is one of the biggest use cases for a token. And then that's the reason that I kind of say that Bitcoin is in a league on its own. In all other cases, with the passage of time, you'll start realizing that a centralized solution is much better. And all of these solutions, including Ethereum and all the other altcoins, over a period of time, start behaving more and more just like a centralized database and a centralized solution on that spectrum, at least. So according to me, because I'm a Bitcoin maximalist, and it's because of research, it's not dogmatism, that money is the best use case for a token. Everything else are in the use case are like securities. They can power a company just like securities are, but they're not a decentralized solution.
sure.
I just want to
Yeah,
add
yeah,
to
go
that
ahead.
last part.
Yeah,
In terms of technology, I think another use case would be in the private securities market space. Private securities around the world are a far bigger marketplace than securities which are traded within walled gardens, such as exchanges. And if a technological innovation can come to facilitate faster, cheaper a means of transfer of securities to facilitate secondary market liquidity and also give visibility to ownership structures. This would enable private enterprises across the world to access uh, pools of capital. And I think things like financial inclusion and powering small and micro enterprises around the world can benefit much higher using this underlying technology within the securities market space.
sure.
Uh, to agree with
Well,
Sandeep
on that
Avedi
point,
equally or more.
sure. On that point, can you shed some more light on the $10 million digital securities offering that you conducted last year? Like, how was that a better way to raise capital than traditional ways of raising money then? Like, what were some of your learnings from that process? Yeah.
Sure. So for us, how we look at it is purely from a technology angle point of view. Tokyo is one as a region in as a city is a great city to own real estate, but it's not easily accessible for a wider pool of global investors, unlike, say, a city like London or Dubai is for a global portfolio real estate investor. So what happens is that when you take a real estate developer who goes into premium areas of Tokyo, identifies property within that, and you know rebuilds, builds on it, renovates it, sells it out, operates ryokans or the traditional Japanese inns, by enabling investors to buy into their preferred equity, which was digitized. What it in effect does is that it enables global investors to participate within the Tokyo real estate market. It enables ease of access, ease of ownership, access to ownership, and of course transferability, which then can correspondingly contribute towards liquidity and so forth. And given that Olympics got postponed to 2021, and that there was that whole build up within Tokyo, this was a niche developer who was working across those premium areas, and given all the COVID effects and things like that, there were certain things that were happening within those cities in terms of how houses were renovated, which areas became from a, say, high income, but to and then to ultra high income. So those were the segments this developer targets. So what we were able to do was to facilitate investors to access those developer margin and margins which come within the by investing within real estate in Japan. Not just to Japanese investors or those regional investors who are familiar with investing within Tokyo, but to a wider pool extending, straight up from Tokyo to the Middle East, to North America. So for us, the technology was an enabler. Why can't you do it in a conventional equity issuance? Yes, you can, very easily, which is what we do day in, day out. And but the thing is that when you have a private security and you own private security, custodying it, say within a private bank, is a little bit more, it becomes an expensive affair. And number one. Number two is that if I were to transfer ownership, do I have to then send my share certificates to my SPV, or do I have to send it all the way up to Tokyo to have it validated? That whole the process probably is 6 weeks or to 9 weeks. Now the process is a couple of hours in
Oh,
terms of facilitating the transfer. So within private markets, if you can bring in this technology into securities issuance, securities trading, the benefits are immediate, which is why you see now. So North America is still leading in terms of the number of issuances within digital securities. It's because the private securities market is much more vibrant, and there is that captive pool of capital which participates on a regular basis. So in markets like that, this technology is having immediate effect, and it's the and that uptake is also easy. Like I don't have, like, when I'm dealing with investors, I deal with traditional investors, from family offices to insurance companies to high net worth individuals who have made their money within the standard real economy activities. Yeah, try and it's easy to explain there because there's nothing to explain. This is the private company. What is explained is the underlying merits of that, in the virtue of that investment, and utilizing technology here in terms of representing the technology is a means of improving efficiency. I'm not trying to reinvent the wheel and tell them that the medium of exchange, you can buy coffee with it now. It doesn't really happen.
all right. So,
So it's easier. Yeah.
yeah, that's some of the immediate use cases with regards to securities offerings. Is just you can plug and play with the technology at the stage it is right now, and you can reap the benefits by having smaller settlement windows and bringing in more liquidity in markets, which in a way would not be are not as liquid in the traditional sense, right?
Yeah, liquidity, it's yeah, I mean, yeah, of course, if you go into a wall garden such as an exchange, yes, liquidity is a factor, but within private securities, what I need is ease of transfer,
Ease of
because
transfer.
it's yeah, and which then of course, ideally, yes, we need, ultimately the goal is that all of these technological innovations should facilitate attracting a wider pool of equal liquidity, so that, you know, secondary market price discovery is that much more efficient. But yeah, I think we're just not there yet.
Sure.
But then, you know, if a digital security is a unicorn, then you would have that liquidity.
All right, sure. Sandeep, my next question is for you. You've been through the highs and lows of the Indian crypto market, and in the past, the regulators, not only in India but across the world, were hostile towards the rise of these crypto assets. Has that changed in your opinion? And what could be the market opportunity or various ways in which emerging economies can benefit if regulators have a more accommodative and understanding stance on this new technology?
That has dramatically changed. I think if you're new to Bitcoin or to cryptocurrencies, you'd feel like the regulators are extremely against this technology. But if you've been in it since 6 7 years, you'd be like, this is amazing. It has reached. So I think in terms of financial regulation, the US kind of leads the entire world. By arm twisting, or by kind of laying down the best practices. And I think the adoption, the acceptance of Bitcoin and cryptocurrencies in the US has been unprecedented over the last 1.5 years. There are a couple of US Senate people who've been appointed who are pro crypto. The state of Miami, the governor of Miami is absolutely pro crypto. Wyoming has given banking licenses to
Yeah.
cryptocurrency companies, and so they're kind of leading the path and for the entire world. Even in India, has been a sea change in terms of the attitude from the at the highest level. I mean, our current finance minister has gone on record to say that they are going to maybe legalize trade in cryptocurrency. They don't want to use it as a mode of payment, which is fine. But even the fact that it can be used as a store of value, which means it can be used as an asset to buy and sell. So I think it's in a great place from a regulation point of view, and I think this is the path which any new technology kind of goes through this friction in the beginning, and then I think more and more kind of regulators follow the lead and kind of realize it's happened to decentralized, not really decentralized technologies, but other things like taxi sharing and Airbnb and stuff like that, and even with the internet and other technologies. So I think we are in a. I think Bitcoin and cryptocurrencies in general is in a great place from a regulatory perspective.
All right. And in what ways can, like, Indian regulators help to understand and grow this entire ecosystem? Like, we saw that crypto was not even included in the RBI's sandbox circular that came out, right? So, do you think that for a network technology which is decentralized, distributed, permissionless, which is going to exist whether any regulator or jurisdiction jumps on board or not, right? Like how the internet exists. Is this the best way to go ahead by excluding any innovation around crypto assets?
So
What
in general, decentralized.
what can like we as a country miss out if we don't pay focus to that? Yeah.
Yeah, we started a industry organization called BACC, which is extremely popular under IMA, right? So I think the decentralized technologies do not need permission, do not really need actively for the government to really engage. What they need is that the government doesn't prohibit it. That's all it's needed, because the innovation is happening, everything is happening at the ground level. If the government doesn't prohibit, then it's enough for the industry and industry participants and the community to take over, to innovate, to adopt, to see what works, what doesn't work, what fails, what succeeds. Um, Luckily, at least right now, I mean, with some speed bumps, that's been the stance of the Indian government. And I hope uh, either they understand and go really deep and they accept it, or they just keep it a hands-off approach for the foreseeable future. And that should be enough for the industry.
Sure. All right. Gauri, what's your thought on how should regulators go about with regulating this entire, governing this entire ecosystem?
Yeah, I'll take a more general perspective because I'm not familiar with what
Sure, sure.
happens in India because
Yeah.
I don't have a
Maybe you can
link to
share
it.
some
Yeah, so from
good
a
practices that
general,
we are checking in other jurisdictions as
yeah.
well.
So for us, how we see regulation is that ultimately a regulator's role is to protect the retail investors, but it shouldn't come at the expense of stifling innovation, nor should it come from the perspective of limiting personal freedoms. So in that sense, I think the best approach regulators can have uh, within this space is to have that whole thing about same risk same regulation aspect, right? So you need to treat it equally. So if the
Yeah.
securities market is regulated in a particular way, if I'm just going to go and digitize the shareholders register, I need to be considered in the same vein. I do not have to jump a few extra hoops simply because I've made it easier for someone to invest or transact in a security. I think that's one aspect. Second aspect is there's only few countries which have recognized, namely Switzerland, Luxembourg, Liechtenstein, and I think one other country which has actually recognized the shareholders register in a digitized format, within a DLT, as an equivalent document to a shareholders register that you might receive from a company's house, right? Until these kind of regulations are passed, it will be very difficult for industry participants to actually take maximum advantage of it, because even though I go and digitize a company's securities, if I cannot use the DLT register in a court of law to prove my ownership, I have to do the double effect. That is, I have to have the manual reflection of it
Mhm.
just so that I satisfy a legal requirement. Those kind of impediments need to be removed. And those are the easy ones for a regulator to do once they have that comprehensive understanding. Maybe they just need a node that has which reflects the shareholders register up down their alley where they can easily check. So I think things like that are key. Third thing is, of course, any new technology, the earliest adapters within that technology will be the bad actors. That is like a litmus test for a good technology. If a technology attracts a lot of bad actors, it means it's good. There is a valid use case within it because they're always trying to be a step ahead of regulations. I think that should not be a yardstick for regulators to, impose certain restrictions, because it means it's that underlying use case of that technology that should be identified and promoted, while there's rule checks and balances which are imposed to kind of prevent all these bad actors. So I think that balance also needs to be struck. The other thing is, I believe central bank digital currencies are a good way to go about things like that. Because I believe that centralized currencies in a country is a good thing. It's sad that some countries policymakers do not know how to run their monetary policy, but then so be it. You don't deserve to then have a good currency. uh, but as a use case, so when things like that, if they can kind of facilitate those things, we can eliminate a lot of inefficiencies which are there within the existing banking system and financial services industries. So that's my 2 cents on it.
No, so yeah, some really interesting points from both Gauri and Sandeep on how to regulate the space. Like how Sandeep said, don't prohibit the disruptive technology, and like what Gauri added on, regulators should go about regulating your businesses which are more similar to your traditional businesses which they already regulate, like for example in the security space. That could be one of the first steps towards regulating the entirety of the businesses that are built on top of this. So really interesting points, and this was a great discussion because we had uh, a cynic as well, and we had like a believer on this technology, and that's how, with some friction you get really good insight on such topics, right? So Soham, do we have more time for a few questions?
I think we are over time. I think we've overshot
All
over
right,
time.
sure.
So I think it is a great conversation. I think the insights have been very, very welcoming to our delegates, and I think we have there are a lot of takeaways from this. I would like to thank all the speakers, Sandeep, Mr. Gauri, Siddharth, for taking this discussion. To end this session, I'd like to thank our partners, our title partner CoinDCX and Zepway, powered by partner CoinSwitch Kuber, brought to you by partner BitBins, platinum partner Facebook, knowledge partner Global DCA, and insight partner Ikigai Law. Delegates, please look forward to the upcoming sessions of Huddle 2021. And thank you, speakers, for this discussion. Thank you.
Yeah.
Thank you.
Thank you.